Hey guys, welcome to the Silver Report. Here we are. It's Wednesday, February 22nd, 2017. We have gold currently trading at $1,239.20. Silver's trading at $18.10. And let's get right into some of the economic factors that will be playing a part into the price of precious metals. And so we see in Germany, the most prominent bank in Germany right now is facing the risk of imminent collapse. And this potentially profound effects for the EU, the United States, and the rest of the world. This is a cataclysmic global banking collapse. And it's not been seen since the implosion of Lehman Brothers in 2008. The fallout from this collapse in the global banking world is something that has never been seen. These events haven't taken place in a vacuum, as earlier this year, savvy international investor Lord Jacob Rothschild, during a semi-annual address to RIT Capital Partners, announced that they are reducing stock market and currency exposure and increasing their gold holdings, warning that the world is now in uncharted waters, that's his quote, and the consequences are, quote, impossible, end quote, to predict. Rothschild stated, the 6 months under review have seen central bankers continue what is surely the greatest experiment in monetary policy in the history of the world. We are therefore in uncharted waters, and it is impossible to predict the unintended consequences of very low interest rates, with some 30% of global government debt at negative yields combined with quantitative easing on a mass scale, end quote. And so Lord Jacob Rothschild, one of the richest men in the world, one of the controlling influences in the world, he sees the impending collapse of Deutsche Bank as being something that has caused him to reduce his stock market and currency exposure and increasing gold holdings. So he's no longer holding his money in the stock market or in currency, but in gold. The collapse of Deutsche Bank would most likely begin a cascade of Western banking institutions falling like dominoes. This could include Barclays in London, Citigroup in the United States, which is already on the verge of collapse. And we saw that JP Morgan Chase were shutting down ATMs in Manhattan this summer. And so when they valued Lehman's worth at its collapse, Deutsche Bank currently values of $1 trillion is significantly more than Lehman Brothers' valuation during their collapse in 2008. So it is a much bigger player, and its exposure covers all the different banks throughout the world. During the bailout and the collapse of Lehman Brothers, we saw that Deutsche Bank ran into massive failure level struggles. And what happened was the Federal Reserve, along with some of the stimulus money they printed and the bailout money that they took and the money from the American taxpayers that they took and wanted to distribute to their banker crony friends, Deutsche Bank was one of those banks that got the payout from Mr. and Mrs. American taxpayer. This is essentially the financial heart and soul of the European Union. Now, when Jacob Rothschild, whenever he comes out and makes a statement, he is buying gold because the central banks are out of control, you begin to understand the sheer magnitude of what is happening, as his family has been in de facto control of the world's central banks for centuries, one of the institutors of the idea of a central bank. So Deutsche Bank shares have fallen sharply on the news that German Chancellor Angela Merkel, she will not bail out the struggling bank, with shares falling by as much as 6% in early week trading. And now they've turned in their worst performance since 1992. Since just January, the bank shares have lost over 52% of their value. So what we're seeing that Merkel, she also said she refuses to provide state financial assistance to Deutsche Bank in its legal battle with the U.S. Department of Justice. The Chancellor made her position clear during talks with Deutsche CEO John Cryan. According to Focus magazine, the German-based lender may be fined up to $14 billion over its mortgage-backed securities business before the 2008 global crisis. So Angela Merkel, she noted, the Deutsche Bank will not be getting a bailout from the European Central Bank, a lender of last resort for European banks. So we are finding that there's no help to save Deutsche Bank. There's no bailout and there's no assistance in their prosecution. And what we're finding is that as investors flee, so the issue we have with these major banks is very similar with all banks. Is number one, people go and they deposit their money into these banks. And if all of the people were to withdraw their money, now you see they pay employees. They pay for advertising. They invest in the stock market. They make loans to people. So they give out money in expectations of later payment of money. And these banks have no money of their own. It's all derived from the people who put their money into these banks. And the issue is that the money that everybody thinks they have in their account, if everyone were to go at one time to withdraw it, they would find that probably only about 15% of that money is there. And the banks would collapse. That's why countries institute capital controls. They don't have the money. The money is in the stock market. The money is invested all around the world. The money is in all of these separate operations at one time. And so when these massive banks begin to collapse, they're so intertwined. The fallout from this Deutsche Bank collapse is going to rock world markets and plunge the world into one of the most dire economic crises in the history of mankind. Deutsche Bank appears to be the most important net contributor to systemic risks. And so that was from the International Monetary Fund. Many fear that in the wake of Merkel's refusal to bail out Deutsche Bank, Germany may now be considered a bail-in instead. So a bail-in is rescuing a financial institution on the brink of failure by making its creditors and depositors take a loss on their holdings. Because remember, they don't really have the money. A bail-in is the opposite of a bail-out, which involves the rescue of a financial institution by external parties, typically governments using taxpayer money. Typically, bailouts have been far more common than bail-ins, but in recent years, after massive bailouts, some governments now require the investors and depositors in the bank to take the loss before taxpayers. So essentially, this entails the bank stealing deposited funds, which virtually no recourse for those individuals who have their savings, which their family was depending on, now no longer exists. It's not at all beyond the realm of possibility, as it happened before in very recent history, to keep the bank solvent. The Bank of Cyprus took almost 40% of depositors' funds, leaving customers with essentially nothing that they could do about having their money stolen. Assets were frozen. ATM machines were not refilled. Perhaps this explains why in mid-August, Germans were told by their government to stockpile 10 days worth of water, 5 days worth of food in the case of a national emergency hitting the country, with the Czech Republic following suit and making similar announcements within days of the German warning. Deutsche Bank's unbelievably risky portfolio and its exposure to the derivative markets, which stands at over $40 trillion, would undoubtedly cause exponentially more damage than the Lehman Brothers collapse did in 2008. And it precipitated the Great Recession. That we are still feeling the effects. We've never recovered. And you know what? The money is just not there. The risk of failure has now gotten so threatening, a number of funds that clear derivative trades with Deutsche Bank AG have withdrawn excess cash and positions held at the lender. And so the vast majority of the bank's more than 200 derivatives clearing clients have made no changes. The hedge funds run on cash highlights serious concern. The paranoia of an imminent collapse spread to the U.S. as 10 hedge funds that are Deutsche Bank clients have decided to withdraw their cash and listed derivatives portions from the bank. And so what we are facing, investors around the world are preparing for. And when Lord Jacob Rothschild, whether or not you despise the name or you don't even know who he is, when his money moves, it's wise to follow, because those at the top, they never lose money. And that's what this channel is all about preparing yourself for what is coming. Stockpile food and water. And I thank you guys so much for joining me here on the Silver Report. If you like the content, be sure to subscribe, like the videos, share the videos, get the word out. We have to wake the masses up. And I thank you guys all so much for joining me. Almost up on Free Silver February, so the drawing will be soon, guys. And I thank you guys so much. And as always, stay safe.